Should you be buying individual stocks or ETFs? Stick around, and in this video we'll find out which would be the best option for you. So, as a beginner investor, I'm sure you've asked yourself this question. Should I be buying stocks, individual companies, or should I just buy ETFs? To answer this more clearly, let's have a quick look at what the differences are between the two. Let's say you have £2,000 to invest. We'll put £1,000 into an individual stock, like Games Workshop, and we'll put £1,000 into a Vanguard FTSE 250 ETF. When you buy the £1,000 of Games Workshop stock, you're buying a very small piece of the Games Workshop company. In effect, you're actually a part owner of that business, albeit a very small part. So your £1,000 is very concentrated and solely tied to the fate of the Games Workshop company. In comparison, when you buy an ETF, like the Vanguard FTSE 250 ETF, your same £1,000 is spread over 250 individual companies across multiple sectors. Companies like British Land, Hargreaves Lansdown, Greggs and Games Workshop. You get the idea. And as a bonus, that ETF pays you an annual dividend of 3.2%. This spread of companies gives you instant diversification, as opposed to the £1,000 that you invested directly into the one company, Games Workshop. So it's a pretty safe investment. It's highly unlikely that all of those companies are going to drop to zero and you're going to lose all your money. The likelihood of that happening would be for the whole world economy to drop to zero. However, that £1,000 that you invested in that individual stock of Games Workshop could, in effect, drop to zero, losing you every penny. Very unlikely, but it could easily happen. In my opinion, if you're a beginner investor, then there's no better place to start than ETFs, exchange traded funds. They are by far your best option to get quickly invested in the stock market. Time in the market is by far more important than timing the market. So once you have some savings ready to invest, you want to put that money to work immediately. And the easiest way to do this at low cost is with ETFs. Now, you could just continue adding ETFs to your portfolio forever, and you'll do very well over a long period of time. Warren Buffett, one of the greatest investors of all time, has often said that beginner investors should consistently invest in low-cost index funds. Keep buying it through thick and thin, especially through thin. What he means there is to load up on those ETFs when the market is down. Even with ETFs, you need to do a little bit of research. It's not zero effort. In the beginning, you'll need to do some research into what companies are actually inside those ETFs, what countries, what sectors, whether they pay dividends, and their track record. And also, which is very important, the fees. To do this, personally, I go directly to the ETF provider's website. That way, you know you're getting up-to-date and correct information. For example, for the Vanguard FTSE 250 ETF we spoke about, I would go to vanguardinvestor.co.uk and look up VFEM, which is the ticker code for that ETF. The site has everything you need to make an informed decision on whether that's the ETF for you or not. Now, as your investing journey continues, if you're anything like me, you might take more of an interest in individual stocks. That's great and can be very exciting. However, there's a hell of a lot more work you'll need to put in if you want to invest in individual stocks. Plus, you'll need to keep an eye on those stocks as time goes on to make sure the story and the reason you bought those stocks in the first place is still valid. Before buying anything, you'll need to learn how to read a company's balance sheet, and you'll need to know the relevance of certain ratios like PE ratio, return on equity, cash flow, the dividend yield, whether they have any debt or not, the PEG ratio, earnings per share growth rate, the spread, and many more. I'll be covering all this in a later video, so please like and subscribe so you don't miss out on any of that. I'll go through the steps that I use to pick individual stocks and the websites that I use to do my research. I'll also be giving away my free PDF version of my stock picking cheat sheet that I use every time to do my research before pressing the buy button. All this research can take a fair bit of time, so if you don't have the inclination, the interest, or the time, or couldn't think of anything worse than trawling through some income statements in your spare time, then just stick to ETFs and index funds. You can't go wrong there. Okay, so let's say that you want to put in the research, you have the time and you have the interest to invest in individual stocks. Once you have a portfolio of around 15 to 20 stocks, you essentially become your own mini ETF, reducing that risk. I personally have 22 individual stocks spread across my SIP with Hargreaves Lansdown and my ISA with Interactive Investor. The majority of the companies I own are UK based, with a couple of US companies, and they're spread across multiple different sectors and industry. Personally, I think that once you get to 20, 22, 25 stocks, investing in any more of those is pretty pointless. You may as well just buy an ETF. What I do like about individual stocks though, is by buying them, you have the chance of one or two outliers that can seriously outperform the wider market. But on the flip side, you could have a share that will go to zero. So you need to be comfortable with the risk and use your common sense when doing research in what to buy. So with greater risk can most certainly come greater reward, but you have to be comfortable with that risk part. And the more concentrated your portfolio or the less shares you have, the more risky that will be. And the more likely you are to lose substantial amounts of money if things go wrong. Another famous quote by the legendary Warren Buffett was, "It's okay to put all your eggs in one basket, you just have to watch the basket." If you'd like to know how I started and how I grew my portfolios up to £50,000 and what that paid me in dividends over a period of a year, check out this video next.